Okay, I think we have enough quorum now. Good morning once again. Welcome to our webinar, Tax Breakthroughs, Uncovering Hidden Tax Opportunities. My name is Leonard Kisu, and I'll be your moderator for the session. Today, we have an action-packed webinar with 5 topics in no particular order. The Tax Amnesty Program 2023, Section 42 tax credits, tax refunds, e-TIMs, and reconciliation of the iTax ledger. Unpacking these intricacies today will be Matilda Mutiso and Samuel Njoroge. I think we can begin with an introduction from Matilda.
Thank you, Leonard. Hi, everyone. My name is Matilda Mutiso. I'm a tax manager at TaxWise Africa Consulting LLP with over 5 years working experience, handling various assignments on transfer pricing, tax structuring, tax advisory, tax compliance, and general tax advisory services. So we are glad to have you in this webinar today, and we hope that you're going to find the session informative. Thank you.
Over to you, Samuel.
Good morning, everyone. My name is Samuel Njoroge. I'm a tax partner at TaxWise Africa Consulting LLP. Been with the firm for the last, I think this should be the 12th year since inception in FY 2012. So the reason why we're having this webinar, just to give an introduction, is because of what has been happening from a theoretical perspective as well from a practical perspective. There's so many tax changes that have come in affecting taxpayers and most of our clients, and as well as there are levels to it that we've seen in terms of how you need to manage tax going forward. So everyone needs to have an effective tax management system, and it starts with the basics. I'll call whatever we are dealing with today as basics, because when you look at all taxpayers, when you're coming to give tax advisory, we normally look at tax compliance as the basic level, which is the areas that we are covering today. Then you go to tax planning and tax controversy at the end. And all these will become important because we are dealing with quite an effective administration when it comes to tax revenue mobilization. So either implementing the current laws or passing new laws, they're quite effective, all the way from KRA to National Treasury to the National Assembly to the executive. They are very well aligned, and new laws are being passed quite effectively. And then after that, of course, is implementation. So what does that mean for you as the taxpayer in the country? So what you need to do is to ensure that you have a proper tax risk management. We covered tax litigation last month in our first webinar. So this month now we are looking at basic tax compliance and what are the tools that have been provided and how to take advantage of it. So my colleague Matilda will start, and then we'll continue discussing during the webinar. So welcome everyone, and looking forward to a good session. Thank you.
All right, thank you, Samuel. Just a few reminders, the session is being recorded. We will be taking questions at the end of the session. For those of you who have to leave the session before we complete, we will be accepting questions via email. I will attach the email on the chat section. Yes, the recording will be shared on our YouTube channel, which I will share a link as well. I think we are done with our pre-flight checklist. So Matilda, we're ready for takeoff.
So thank you once again and welcome. I'm going to be discussing on iTax ledger reconciliation. So just to start with, in 2020, KRA issued a public notice to all the taxpayers, notifying them of the intention to undertake a reconciliation exercise on their legacy ledger balances. And the intention of this was to establish the correct tax balances. Then thereafter, now the KRA would migrate the balances to the iTax system. So basically, the exercise was not aimed at issuing assessments to taxpayers, but it was ideally for the sake of just ascertaining whether the balances which are captured in the ledgers are the correct ones. So KRA had requested for confirmation from the taxpayers by giving the correct tax position. Then from there now, KRA would carry out the reconciliation exercise. Then whatever balances were remaining would be transferred to iTax. So you find that there are some instances which might cause some variances on whatever amounts are captured on the ledger accounts, which could be due to either failure or late payment of taxes, or even late filing of returns, which might result to accrual of penalties and interest. Other cases may also be existence of additional assessments which KRA have issued, and either they have been objected to or they are pending objection. And sometimes the assessments
Matilda, I have someone in the chat section saying you're a bit faint, so you could be a bit audible.
Sorry for that. So the instances of variances in the ledger account could be resulting from either failure, late payment of taxes, or filing of returns. And this could lead to accrual of penalties and interest. Other instances of existence of additional assessments on the legacy ledgers. And maybe the assessments have been, the objections have been filed and vacations have been made, but the actual implementation of the vacation has not been done in the ledgers. So this could also result to some variances in the ledgers, which now calls for the taxpayer to follow up for reconciliation with the tax station. Also, other cases of credits being posted on the ledgers incorrectly. For example, where maybe a credit has been posted in the wrong tax period, it will imply that the tax period which was intended to be reconciled will have some outstanding liabilities, which now is up to the taxpayer to make a follow-up with the tax station to ensure that the amounts are reconciled. Other cases might be due to unreconciled payments. For example, for the legacy period, you find that taxpayers had made payments manually, but they were not posted in the ledger. So in this case, you find out that in some periods, the ledger will show some outstanding liabilities, which now it's again up to the taxpayer to ensure that they make follow-ups with the tax station for reconciliations. So what are some of the repercussions of cases where the ledger is not reconciled? One of them is KRA audits. KRA will want to establish the reason for the variances in the ledgers so as to ascertain whether the unsettled liabilities are actually valid or whether they are due to either erroneously posted payments or pending reconciliation. So this, the unreconciled ledger can trigger KRA audits. And basically the taxpayer is required to make an application to the tax station, of course, with the relevant supporting information to ensure that now the amounts are correctly posted and there are no any cases of outstanding balances which are erroneously captured. So other cases, KRA may want to issue assessments either due to returns which have not been submitted or even due to where they have identified cases of under declarations of taxes. So KRA may want to issue either default assessments or additional assessments. That is amending of the original assessments which the taxpayer had made to the in the tax system. In other cases, the unreconciled ledger might lead to suspension of tax obligations. For example, as you're aware of the current VAT special table regime whereby taxpayers the VAT obligation is normally suspended for filing of returns in cases whereby KRA have identified instances of either non-filing, nil filing, or whereby a filing has been made, but the corresponding payment has not been submitted to KRA. So this might also lead to suspension of tax obligation. So again, it's important for taxpayers to ensure that your ledger, both the legacy and the iTax ledger, is properly reconciled, so that now you avoid the instances of tax assessments or even the cases of being blocked from filing of returns. Of course, you have to make sure that you submit the necessary supporting evidence of payment or any other information which is supporting your application for the reconciliation. So we have assisted various taxpayers in the process of migrating the legacy ledger balances into iTax. And the process normally involves basically checking whether whatever you've declared as the self-assessment returns is tying with whatever is appearing in the ledger, and also whether the corresponding payments have been correctly captured in the system. So we have assisted various taxpayers in the exercise, and we have successfully been able to have their balances migrated to iTax. In some cases, they were in a refund position, and we have also been able to assist them get the refunds. So where there are taxes to be paid, the recourse for that is now making a payment plan to the KRA, so that now you ensure that the taxes are settled and the ledger is fully reconciled. So we are available to assist taxpayers in review of the ledgers. As I've said, the legacy and the iTax ledger balances, just to ensure that the balances are correct. Then now we shall also assist in the application and following up for migration of all the balances to the iTax system. Now the next step will be now to request for a payment plan on any resultant unsettled principal tax. In cases where there are overpayments, we are available to apply either for refunds or for set-off of the overpaid taxes against any future or any current outstanding liabilities. At the same time, we are available to assist on application for amnesty on any accrued penalties and interest in the ledgers under the current ongoing tax amnesty. So long as the penalties and interest now relate to the periods which are covered under the amnesty. And the other way in which we can assist you is that now following up on reversal of the incorrectly accrued penalties and interest. And all this will be aimed at ensuring that your ledgers are properly balanced, the payments are correctly captured in the system, and any resultant, either erroneously accrued penalties or interest are cleared from the system. And this will ensure that you don't receive any future assessments from KRA just because of any pending reconciliations. So you can get in touch with us to assist you in the reconciliation exercise.
Okay, thank you, Matilda. So Samuel, tell us Section 42 credits.
Okay, thank you, Matilda, for that. Before I get to and of course, it seems very straightforward, but what we see with most taxpayers or most of our clients is that most of these issues keep repeating and each year. And I know it's quite frustrating for a lot of clients. When you filed a matter, you filed with KRA, you've given them all the documentation, KRA is supposed to action on it, but it never happens. It boils down to good old inertia, bureaucracy within KRA. So, and of course, with the changes of the staff every 3 years, then a matter each time keeps on coming up. So what we advise our clients is most of the time when we are onboarding you, we'll tell you, let's do a health check. Let's not only review based on the statute of limitation, the 5 years that are covered, but also let's look at your legacy, let's look at your ITAX and make sure that all things are reconciled, because most of these items, they might be left open and you still have the documentation to support, but every 3 years or when a new officer comes in, they'll be excited. They'll be looking at your legacy, they'll be looking at your ITAX, and they'll see this big amount that is pending. Worst case scenario, they send you a demand, you don't respond within the period, and they go ahead and freeze your accounts, which now impacts your operations. Or at a lower level is when your TCC is not renewed, and maybe that would affect your operations. So it's a matter of let's take care of the basics before we go to the big ticket items. So, Matilda has stated, out of these exercises, you're going to find sometimes you're in a refund position. So KRA at the moment is flush with funds. So if you have any refunds, kindly push very hard. They're paying 30 million Kenya shillings per month per taxpayer. But I'll leave that to Matilda when she covers tax refunds. So let's get to Section 42 credits. Simply, Section 42 credits relates to special arrangements or the double taxation agreements that we have with various other countries, and you have withholding taxes deducted, and you've been given those credits to utilize. Now, the reason why Section 42 credits is such a big matter, and KRA has already appointed a team to deal with the matter, is because when it goes back to KRA's, again, I'd call it non-configuration of the systems. So when the ITAX system came in, when you're filing your ITAX return, there was no place where you could carry forward some of your credits. So it's either your local withholding tax credits, your rental withholding tax credits, and such. Since when your tax advisor or or your auditor is filing the return, since you had to utilize those credits, what would happen is that most people would plug it in the only section that would allow, which was Section 42. Now, the problem came in later on in that KRA started challenging, despite that being an issue that has been generated by them. They started challenging it and saying that, well, you should not have claimed all these credits within Section 42. You should have done it within Section 47 as provided by the Tax Procedures Act and such. So all these brought all these tax disputes, and even now we have 1 or 2 cases that we're still forwarding and following up on. One of the big ticket items that will save you is documents. even if KRA rejects, because typically once they reject, they're trying to assess you, you object to that, goes to IRO, independent review of objection. Most likely even IRO are not going to review it properly within the 60 days that has been provided. Then it goes to tribunal. Luckily, the tribunal has been quite fair, and while they note that these credits should have been reported under Section 47, they also note the failure by the tax authority back then to provide a way for those credits to be claimed. As a result, what would happen is, like one case we have, Leonard, you can go to the next slide. Apologies for that. I think we had some technical issues. The East African Seafood Limited case, you can find the ruling in the public space, and I think Kenya Law have already published it on their website. So the issue, as I was stating it, was some withholding tax certificates that KRA were disputing, and they were saying that the nature of the claim, the way it was done, it should have been done under Section 47, as opposed to having it been done under Section 42 of the Income Tax Act. And like I explained, it was a making of the KRA that it's their systems that were not configured properly. So should you have such an issue, the ruling, as was stated, is that while the taxpayer claimed it under the wrong section, at the point of filing, that's the only avenue that was available to them. So the ruling that was given is that KRA were directed that within 30 days, they review the documentation and ensure that so long as tax are valid, they ensure that the credit is carried forward. So you can see that you get into a scenario of unnecessary dispute because of bureaucratic inertia or an attendance to tax matters within KRA. So for you, what do you need to do? You need to push really hard to make sure that your tax credits, your reconciliations are properly captured onto iTax. The problem within KRA, based on experience, is that you're dealing with different departments, from the compliance department to the debt department, and then finally to the business transformation office, which is basically the KRA IT team who are supposed to capture all these credits that the compliance team have reviewed or the audit team have reviewed, confirmed and approved. An internal memo will be sent to the debt team. Again, the debt team confirms all the payment receipts, everything that you have. And then after that, you have the, Leonard, yeah, thank you. And then after that, you have the debt, the memo from debt going to the BTO team, the business transformation office team, so that now
I'm told, sorry to interject, I'm told your connection is unstable, and I can confirm that too.
Okay, just hold on. Let me try to put on a different.
Sorry, apologies for the technical hitches. For those of us who joined us late, we had Matilda Mutiso take us through the reconciliation of iTax ledgers, and Samuel is just about to wrap up Section 42 tax credits. We are taking questions in the chat section that will be answered at the end. If you do have to leave the session before the end, we have an email that I've attached on the chat section where you can forward your questions.
Much more clear. Leonard, please confirm.
Yes.
Okay, you can go to the final slide on what we can do. So basically what I was saying is that because of all this amount of follow-up, most of the time maybe your auditor or your advisor will just file your document, but there's no that follow-up to make sure these things are done. You need to have basically an advisor who's more like a doggle, that you follow up and make sure the people who are responsible for this do implement it. So from our end, we do make sure that we audit and verify all your credits. We lodge as per the applicable tax law provision. And of course, if you have refunds, we process so that you can get those excess credits and will improve your cash flow. If you have any issue with Section 14, kindly reach out to us. If you have any issue with your ledger reconciliation, kindly reach out to us. And with our team, we'll be able to navigate and resolve those matters. So for now, I'll stop at that, and then Matilda can kick in with the tax refund section. Thank you.
Thank you, Samuel. I'm going to take you on tax refunds, and just as a way of introduction, tax refunds are governed under the Tax Procedures Act, the VAT Act, the Excess Duty Act, and also the East African Community Customs Management Act. So we have various types of refunds which are available to taxpayers, and these include VAT, income tax, that's both for corporates and individuals. We also have excise duty and customs duty. So these are some of the major refunds which are available to taxpayers. So I'll go straight to the refunds under income tax, that is for corporates. So under corporates, refunds may arise from overpayments of taxes. That is whereby the final liability is in excess of the credits are in excess of the final liability which you're required to pay. For example, if you excess withholding tax credits which have been withheld and remitted to KRA under your account, in that case, you qualify for refunds under the excess withholding tax credits. And it's important to note that the timelines for claiming the refunds should be within 5 years from the date of when the tax became due and payable. So it's important that you take note of the timelines so that just to ensure that the refunds do not become time-barred. Also, for first-time claimants, KRA normally will conduct prepayment audits just to ensure that the claim you've made is valid and hence it qualifies for payment to the taxpayer. And the application for the claim must be supported by the relevant supporting documents depending on the type of refund you're claiming. For example, KRA can request for audited financial statements, management accounts, bank statements, invoices, and any other relevant information which KRA finds it necessary for processing of the refund. So we also have refunds under the income tax individuals, which may result from excess taxes deducted at source. For example, whereby the employers have deducted excess payee credits, or even for individuals who have businesses, for example, like who are offering consultancy services, and they are filing their taxes using the individual PIN, and the withholding tax is in excess of the final liability. In that case, you'll qualify for a refund. In that case, the supporting documents, some of the supporting documents which KRA might request to support the claim are things like the P9 forms from the employer, things like the mortgage certificates, as well as tax exemption certificates. And this applies to persons with disability. whereby they are exempted from income tax, and they have the exemption certificates from KRA. The timelines for claiming the same is 5 years, same as for corporates. So it's important that you ensure that you claim within the stipulated timelines. So the other type of refund is refunds under VAT. And refunds in this case might arise from either making zero-rated supplies. For example, if you're making supplies to special bodies, for example, in our case, we have a client who is making supplies to the US Embassy. So in that case, their supplies are zero-rated, and the excess input on the supplies qualifies for refund. Another way in which the refund might arise is due to any excess tax withheld from the VAT, appointed withholding VAT agents, or even taxes paid in error. For example, maybe you're undertaking an exempt project. For example, maybe your project is an official aid funded project. In that case, you're not required to pay for VAT. So in that case, in case you pay the VAT, maybe because of some reasons, which maybe due to some delays in processing of maybe the exemption certificates, in that case, you qualify for a refund under the taxes paid in error. The other case is any VAT incurred on bad debts also qualifies for refund. And in this case, you must ensure that the debts have met the conditions for bad debts. In this case, the claim for bad debts should be made within 10 years from the date when the supply was made. This is effective from 1st July 2023, as introduced by the Finance Act 2023. Initially, the claim was claimable within a period of 4 years from the date when the supply was made. So for the other refunds, that is refunds from excess withholding VAT, zero-rated supplies should be made within 24 months from the date of payment. Then now for VAT paid in error, the claim should be made within 6 months. So it's important to ensure that you take note of the timelines, and depending on the type of refund which is available to you, make sure that you lodge it within the timelines. So we also have refunds under customs duty, which may result from either you paid duty in error, or even you've paid duty and the goods have been damaged, or during the custom control process. In that case, you also qualify for a refund under the customs duty, and the claim should be made within 12 months from the date of payment of the duty. So once you've made the application for the refund, the commissioner has 12 months to give a communication whether the refund is claimable or whether it's not payable to the taxpayer. So what is the procedure for making application for refunds? So the application for refunds is normally lodged on iTax, and as I've mentioned before, it must be accompanied by the necessary supporting documents just to support that these amounts are actually refundable. So the commissioner will require you to support the claim fully. And once the application has been made, the commissioner now has 120 days to ascertain whether the claim is valid or not. So within these timelines, the commissioner must give a communication to the taxpayer whether the claim should be refunded back to the taxpayer. So if it's not claimable, a rejection notice will be sent to the taxpayer. And the Tax Procedures Act provides a provision whereby a taxpayer can appeal to the tribunal if they are not satisfied with the decision of the commissioner. You're allowed to appeal to the tax tribunal. So once the commissioner has ascertained the validity of the claim, now the refund should be made within 6 months from the date of ascertainment of the validity of the claim. So this change has been brought about by the Finance Act 2023. Initially, the commissioner had 2 years to process the claim after ascertaining the validity. So now this calls now for the commissioner to be more aggressive in reviewing and processing the refunds. So that now is not caught up with the timelines. So once the claim has been approved for payment to the taxpayer, the commissioner will issue an order to the taxpayer, a refund order to the taxpayer. And in this case, the refund can be a cash payment or a set-off against any outstanding liabilities. This can apply to different tax sides. For example, if you have a refund under VAT, the credits can be utilized against corp tax or pay-as-you-earn, whichever liability which you have. So once the order has been issued, and you had applied for set-off of any outstanding liability, the Tax Procedures Act provides that there should not be any penalties and interest accruing on the amount which you had applied for set-off. So in this case, you're supposed to apply to the commissioner so that the set-off has been effected appropriately. So how can TaxWise assist you in the refund application process? We have had different cases of taxpayers whom we have assisted in the refund process and have successfully obtained their tax refunds. Some of them are up to a tune of even hundreds of millions. So you can get in touch with us to assist reviewing your tax position just to confirm if you qualify for any tax refunds, as well as carrying out ledger reconciliations on any incorrectly utilized tax overpayments to ensure that the same are reversed and the credits are available for you to claim. Then now the final process will be application and processing of the refunds for either cash payment or set-offs, depending on what the taxpayer intends to do. So you can get in touch with us and we'll be able to assist you accordingly, not only on the tax refunds, but also on advisory on any tax incentives which are available to you as a taxpayer. So thank you. I'll hand over to Leonard. Proceed from there.
Apologies for that. We seem to be having some technical issues. The team was resolving it. I hope everyone can hear me clearly. So I just wanted to say 1 or 2 points under refunds that Matilda has just finished on. So there are a few steps when you're dealing with refunds, and also we'll mention 1 or 2 cases, recent cases that have been ruled on. So after application, of course, the next step is verification by the tax authority. They review to make sure that your documentation is in order. Going forward with e-teams, we do expect that this process for verification will be easier because the tax authority will already have the sight of all data from their end. So both for your output and for your input. So with verification going forward, that will be a quick step. Then after that is the debt status. Matilda has mentioned that briefly. And what happens is that once your approval has come in, that you've been verified, yes, your refund is legitimate, you're going to approve it, the KRA team will ask for your debt status. So again, based on what we have mentioned before about Section 42 and ledger reconciliation, by the time you're going for your refunds, ensure that your debt status is clean. Because should there be any penalties or interest or principal tax that are overdue, before now the tax amnesty came in, what they used to do or what they're going to do now for principal tax or any penalties and interest for 2023 going forward, they'll be set off immediately. And in some cases, the set off will happen even without you knowing. And then now reversing that process, that a set off was done against part of my refunds, or even in some cases, all my refunds, becomes again a tax dispute that should not have been there if from your end you had been a bit more aggressive to make sure that your tax ledger is clean. After that, after the approval, assuming that your debt ledger is clean, you can make the decision that it's either you get a credit voucher so that now you can offset against any of your future liabilities, and this is any tax heads. So withholding tax, VAT, PAYE, corporate tax, but you need to choose which tax head. So you write to the tax authority and say, I have a refund of 100 million. I want to utilize against corporate tax 25 million, for example. I want to use 25 for VAT, 25 for payroll. So you have to be specific on which tax head that you want your refunds to be offset, the approved refunds. In the alternative, it's to now push for your payment, in which case you're going to give your bank details, a letter in your letterhead signed off and stamped, which will be shared with the tax authority, and then the tax authority will process. So you're going to get disbursement orders on your iTax registered email and also on your iTax platform. And then the disbursement, the amounts will check in into account within 2 weeks from the date that you receive your disbursement order. But before you get to all this process, of course, there's a lot of back and forth with the tax authority. You all know about the way they have changed the law about exported services. So it was one way of trying to reduce the refunds that are due. Before that, they had looked at and attacked the shipping industry, where they were trying to restrict the refunds being processed for the shipping industry. And at the moment, they've changed their tact. There's one case that was ruled in May at the High Court, unfortunately against the taxpayer, who was an agent of a principal and providing services to the principal who's non-resident. The case is Poland, the entity is called Poland, and they lost both in the tribunal and in the High Court, where the High Court pronounced that the input VAT that the local agent entity is claiming as part of their input, it's not theirs. That input VAT is the principal's. Now, of course, there are various arguments and presentation that have been done, and we are hopeful that Poland will appeal that ruling to the Court of Appeal. But you can see that it's no longer just the law itself that's saying I'm providing an exported services, I'm providing services to my principals, a shipping entity. But now they're going to the nitty-gritties of looking at not only is your input VAT claimable and unclaimable, but is this input VAT going to be your input VAT as the Kenyan entity, or can it be interpreted as the input VAT of the principal? Looking at it from a practical perspective, that argument by the tax authority seems not to hold weight, but it goes to KRA is operating at tax controversy level. They're looking at ways to reduce your refunds, to reduce your whatever credits you have so that you pay more, which is basically looking at a law and seeing how do I implement it to the best of my advantage, tax controversy. While most taxpayers, we are still at tax compliance. Like I stated in the beginning, tax compliance, make sure you're clean. Then you go to tax planning so that you can structure or restructure your operations in a way that best suits you. Then after that is when you get to tax controversy, where you look at the law and interpret it to your best of your advantage. So KRA are already at tax controversy, while most of us taxpayers, we might be just at the tax compliance or starting at tax planning. So we do need to up our game and make sure that we take care of all these basics levels so that now we can go toe-to-toe with the tax authority, because again, going forward, we do expect they're going to be aggressive. So that was on refunds. Let's get to the tax amnesty. Periodically, of course, the tax authority is going to have such amnesties running. Before that, we had the voluntary tax disclosure program, which was for a specific period. And luckily, they've now introduced the tax amnesty that now operates for from 1st September 2023 all the way to 30th June 2024. So the period is 9 months, and already since we're getting into December, that's almost 3 months gone. And KRA were configuring the system. Luckily, what they've stated is that should you have paid all your principal tax by end of December 2022, all your penalties and interest will be automatically waived, and the waiver is happening per tax head. So that's good news. Once they configure the system, so long as your principal taxes are paid, then it's going to be cleared. It goes now to the second stage where if, Leonard, please go to the next slide. If you still have not paid your principal tax as of end of FY 2022 December, but you get into a payment plan or you're going to pay before 30th June 2024, then again, all those penalties and interest that were accrued will be removed, because the principal tax that you're dealing with is for prior periods of December 2022 going backwards. Now, the tax authority, together with the tax policy departments, both at KRA and at National Treasury, they seem to be giving with one hand and taking with the other. The problem being that the tax waiver provisions have been deleted. So effective, this was June 2023, you cannot apply for a waiver. Hopefully, if you had already applied for waivers for maybe between January to June, you had already lodged it before the new laws came in, so that now going forward, if you incur any penalties and interest, there is no provisions that would allow the commissioner to waive for you. Leonard, please go to the next slide. So that's one of the items that they've taken out. The second one they've done is to remove tax abandonment. So one of the clauses that was in the Tax Procedures Act was that because of difficulty in collections, for example, and any other factors, the commissioner would abandon the taxes. And for example, the case that was there was the Kenya Breweries Limited on the issue of keg, the keg product, Senator Keg. And there was an abandonment that had been reached upon based on a settlement issue that the KRA had reached with the taxpayer. Of course, now with a new regime coming in, everything is relooked at again, and now that has become a tax dispute. But going forward, there'll be no abandonment because all those clauses have been removed from law. So what do you do to take advantage of the tax amnesty? There's the basic, of course, your ledgers are clean, you've looked at them and ensured that any penalties and interests are going to be waived. That's very good. Legacy system, you looked at it and ensured that you have documentation, you're following up with the tax authority. That's very good, but you should go a step further. If you've not done a top-down or a tax health check review on your operations, at least for the last 5 years, and there's not been any audit by the tax authority within those 5 years, remember those are still open years for the tax authority. So it will be in your best interest to undertake a health check to make sure that you review and get all the inadvertent tax risk or the non-payment that you have or the non-filings that you have, so that now you can correct that. If there's any taxes to be paid, you get into a payment plan with the tax authority, and then the principal, the penalties and interest are completely waived. Those amounts are quite high if you look at it from a 5 years perspective. A 5% penalty together with 1% interest applicable on each month. So the advice here from a tax risk management is ensure that you undertake a top-down on your operations and ensure that everything is as clean as possible before the next year, 30th June. So how do you go applying and processing the refunds? You do it through the iTax system. It's enabled for taxpayers with principal tax liabilities. And then the application, if you have the principal tax liability, should be accompanied by a payment plan. I would state that you discuss that with your tax advisors, if it's us, the best. So that now you're able to manage your cash flow and also ensuring from a tax perspective, you're not exposed. So they'll review for this, the automatic for the one that is going to be removed immediately for anything that I said by December 2024. And once everything is reviewed in terms of accuracy, the tax amnesty applies. Next slide, Leonard, sorry. I've mentioned the repeal of the waiver clause as well as the tax abandonment. You can skip that to the next slide. So how can we assist you? One of the items, like I stated, and I'll start with the point bullet there at the end, you follow up to ensure that the tax amnesty, the penalties and interest waivers have been granted and they've been done properly, and you have proper supporting documents. And the cases that we're looking at is EABL, like I've mentioned, the tax abandonment. There was London Distillers who had a waiver, and there's NCBA who also had a waiver. So all those cases are being relooked at and they're being reopened. The only defense that you're going to have as a taxpayer is if you have proper documentation, so that by the time this matter comes in and you can rush to the tribunal or to the court so that you seek their protection. And then the other one is negotiation on the payment plan on any unsettled principal taxes that you have. And of course, like I've mentioned, take advantage, engage your advisors, engage your auditors to do a proper thorough review on your operations, so that now you take advantage of this tax amnesty. It seems that it's not going to be, unless they introduce something new in the Finance Act 2024, by either bringing back the waiver of penalties and interest. It seems that for going forward, at the moment, based on the current law, if you incur any penalties and interest, it's going to be collected as if it was the principal tax. So that's on the tax amnesty. Let's go now to e-Teams, which has been generating a lot of discussion on why do we need e-Teams, especially for the non-vertible taxpayers. So e-Teams came in, Leonard, next slide. E-Teams came in because of one issue that the tax authority had been having some few years back. which is the missing trader under VAT and income tax, so that you can reduce your tax liabilities. So basically, missing trader is the scheme where people are buying invoices, for example. So there was that case that was done by the I&E, Investigation and Enforcement Team within KRA, where some taxpayers were arrested because it seemed, or it was alleged, their sole business was to generate invoices for sale. And then with that, some taxpayers will be able to reduce their VAT obligation and as well as reduce their corporate tax obligation. So it's not specific to Kenya. The EAC partners countries have been having this problem. You remember some few months back, the president saying that he had visited Rwanda and Rwanda would provide a system that Kenya would utilize. So because of this missing trader, the response was from Kenya, we have the tax invoice management system, which is basically that when you file with your ESD or with your ETR machine, so long as these machines are connected to the internet, the KRA would have sight of whatever has been declared. Then they upgraded that and now came to electronic tax invoice management system, which is basically the eTeams. And it's more of a software that is installed on a specific device, depending on the taxpayer, and it's free. Here, as much as I'm bashing KRA on various items, I'll applaud them because eTeams has been working very well, at least from our perspective, based on the taxpayers that we've been handling, and also from our own reportings, because, for example, Teams had an issue where some taxpayers will not be able to generate invoices that were more than 10 million and above, or there would be a lag depending on the internet. So, for example, if it was TaxWise today, there would be a lag because the internet was slow, then the KRA system will not record that invoice. And once you issue it to the client, when the client is trying to claim it as part of the input, they'll get an error because it's not appearing on the platform for the tax authority to verify the specific code that is generated. So eTeams has resolved most of those issues, and it's quite effective, and it's going through all devices. Uganda have their electronic fiscal receipting and invoicing solution server, IFRIS. Rwanda have their electronic invoicing system, EIC, and Tanzania have the electronic fiscal device management system, EFDMS. So Teams, that, like I've said, is ETR-based electronic tax register, while eTeams is the software that will be implemented or that will be installed in a specific device. That the taxpayers goes with, you choose on the platform. So if you go to the KRA's website, under eTeams, you have very well explained steps on which platform works for you depending on your billing. So it's free, does not have teething problems like eTeams, like I've stated, the internet lag, the limit on the invoices, and that limitation for 10 million and above. The stated objectives of eTeams by the tax authority, of course, is simplification, so that now there's real-time transmission of invoices. And of course, for the tax authorities, is compliance with less input from their end, because now they'll be able to get all this big data that is attached also to iTax. Next slide, Leonard. So eligibility criteria for eTeams. In November 2023, there is the public notice that was issued, and it was much publicized in the local dailies and the local news, that previously eTeams used to be applicable to only vertable supplies. So if you're issuing an invoice for any vertable supplies, of course, you issue either ETR, then went to eTeams, and now we've crossed over to eTeams. However, the Finance Act 2023 did introduce that effective 1st September 2023, any person who's making a supply and is required to issue an invoice will issue an electronic invoice through eTeams and will maintain a record of stocks in the system established under the Specific Tax Procedures Act subsection. So basically, in summary, is that from 1st September, that any person who's issuing an invoice, so whether it's vertable or non-vertable for supplies, you are required to have already registered for eTeams and be issuing those invoices on the eTeams platform. Now, of course, the KRA sent the public notice a bit late. I think it should have come in earlier around October, just to state about implementation. But I believe now maybe they're working on their capacity, and that's why there was that lag. So the legal provisions are already there that for vertable and non-vertable, you're supposed to issue a tax invoice unless there's a specific exemption provided for under the Tax Procedures Act, and we'll get into it. Next slide, Leonard. So now, in terms of making sure that people are compliant with that directive or that public notice or those new provisions that came in from 1st September 2023, requiring taxpayers to implement eTeams, they go to the second level of implementation, and where they state that if when an invoice is to be issued and you claim that invoice as part of your allowable costs, then that invoice has to have been issued under eTeams. So unless that is exempted. So from any cost that where you get an invoice, you need to make sure that going forward it's under eTeams. Of course, this will have implication for mostly the small traders and the small taxpayers. When we reached out to KRA to request how they're going to breach that, is that they're stating that any device that can be used to generate an invoice, even if it's a phone and it can be done virtually, it will be possible for the specific taxpayer to do that. If they're able to effectively go down to that level, that even the smallest taxpayer can be able to put it on their phone and issue a tax invoice. Of course, it's a win for the tax authority, because now they'll be able to bring into the tax bracket the non-formal sector where the KRA or all tax authority grapple with collecting taxes from. So we wait to see. We're expecting that there'll be a lot of teething problems. Now, there's what is excluded from Teams or eTeams, and this is emoluments, basically your payroll costs, imports, your investment allowances or your capital allowances, interest, air passenger ticketing, and similar payments. The commissioner has the power, of course, to gazette and exempt any person from these requirements. Most likely this will be for, I'm assuming, for exempted bodies, for example, but we'll wait and see how the commissioner goes about that. So here is to ensure that from next year, any cost that you claim, and this will go all the way to the petty cash management, that you'll need to get an eTeams invoice, backed invoice. There are those other questions that people have. What about provisions? At the end of the year, you do make audit provisions. Audit provisions, there's no issuance of an invoice at that point, so it's not covered by eTeams. And of course, the interest cost and emoluments are already removed. Any discrepancies in the sales declared and input claimed by clients, of course, will trigger an audit with the iTax system together now with eTeams. It will be quite easy for the compliance officers seated within KRA to be able to cross-check, and you get your assessment or pre-assessment notice immediately, so that now you can respond to them. The penalty for non-compliance is twice the tax that was due. So if there was any tax that was payable, it will be twice 200% that will be payable. So the good thing is that for most taxpayers, especially established taxpayers, eTeams compliance will be quite easy for you. The flip side is that now for your costs, you need to push really hard and ensure, especially for the big ticket items, that you're provided with proper invoicing that is supported by e-teams. At the end of the day, the tax authority will be the winner if they are able to implement this effectively. So how can we assist? Goes back again to annual tax filings and health checks to ensure that you're compliant and you maximize on your allowable deduction. I'm expecting that from next year, or we are projecting from next year, so the next year tax returns for the December year ends, you're talking about June 2025, we're going to have a lot of disputes. And then of course, for any other person who is within the year, because once you file your tax return, what will happen, your corporate tax return is, should there be claimable expenses that you deducted, and there's no supporting e-teams invoice for it, most likely the system will disallow it, leading to an assessment being issued. So those are the teething problems that we're looking at, because if you're talking about that for each and every invoice that I claim as part of my operating costs, administration costs, direct costs, that it has to be backed up by invoice, so that now actually the tax authority can be able to undertake a provisional tax calculation on their own before you make yours. And you're talking about all these taxpayers, then there's going to be a lot of reconciliation issues coming up. So it would be a tragedy that by the time this is coming, you still have issues with your legacy account, you still have your issues with the iTax account, and then now you come with e-teams. By the time, if you bring all that specter of problems to a side, of course, because of the time that will be spent, it will be more expensive. But if you're able to take care of these matters, especially documentation will be quite key, you ensure you get rid of any issues. So for iTax and legacy are taken care of. By the time e-teams is coming from next year, your accounts are clean and you're able to resolve any pending matters quite quickly. So disputes are coming. I do expect that that will be coming, because those reconciliations will be a lot. And with the tax auditors having big targets, of course, they'll be looking to maximize on assessments on this. Next slide. So that's our presentation today. I go back to what I started with, that there are 3 levels when it comes to tax management, which is advisory, then you come to tax planning, and then you come to tax controversy. As we've seen, some of the KRA audit teams are already at tax controversy, while most taxpayers could be just at the tax compliance level. So we just need to make sure that you move through the stages. Health checks are done, then you get to now transfer pricing, you get to restructuring, and by the time any disputes falls on your lap, you're easy to handle it because you have proper supporting documents, your ledgers are clean, your tax risk level will actually go down, because any tax officer looking at your account will be able to see all returns are filed, there's no penalties and interest, so that you will not attract any excessive audits. So you might stay even 5 years without anyone coming in to audit you, because you respond to all the KRA queries on time. Let me tell you a bit for those who don't know about TaxWise. So we are a tax firm, a specialist tax firm that was set up in 2012 to offer high-end tax advisory services to our clients across the East African. It was set up by our managing and founding partner, Martin Kisu, who's a previous regional partner in Deloitte and also PKF East Africa. We provide services across East Africa, and for structuring, if you need to structure your operations when you're growing or looking at restructuring, we do have partners in Mauritius, Seychelles, and the UAE. We currently have offices in Nairobi and Kampala. The Mombasa office has not picked as we expected, but we'll be looking at setting that up in 2024. In summary, our services cover tax compliance, immigration, your advisory, structuring and restructuring included, tax training, tax litigation and lobby, and tax controversy. We have a team of from financial, legal, economics, so that now we are able to, if it's tax litigation, we can take a matter all the way to Supreme Court if need be, or even the East African Court of Justice. And from a structuring perspective, we do have the economics, we have the accountants, we have the financial analysts to make sure that when we look at your matter, we cover all angles. So speak to us for all your tax, commercial, and immigration matters. Next slide. I think it's the question slides. Leonard? So you can use the contacts Leonard will share. So now we open up to the questions.
All right. Thank you so much, Samuel. I hope it's been a insightful session despite all the hitches. So we do have a couple of questions. Let me just get them. We have a question. Question is, how does ETIMS work for taxpayers not registered for VAT obligation, like consultants who do not meet the threshold for mandatory VAT registration? How does ETIMS work for taxpayers not registered for VAT obligations, like consultants who do not meet the threshold for mandatory VAT registration?
Okay, let me take that question. So for ETIMS, because the laws have changed now, from 1st September 2023, you will need to register. So long as you're issuing an invoice and your tax or your client is going to claim it as a deductible expense, their corporate tax returns, you will need to Leonard, there's some.
I'm not seeing the questions now.
Sorry. So what I was saying is that so long as you're issuing an invoice to your client, you'll need to issue a ETIMS or TIMS invoice. You don't need to charge VAT if you don't fall within the threshold or you've not voluntarily registered for VAT. So if, for example, you're billing consultancy fees of $1 million, you don't need to input VAT because you fall outside the threshold. So you'll issue a 1 million invoice under ETIMS or TIMS. So I go back here and say that on the KRA system, there's a lot of data on that. And if you call your compliance officer or you go to your tax station where your PIN is registered, they would be able to walk you through it and be able to actually install. So you don't even have to visit physically, you just make a call and the tax officers within KRA are going to implement. For this, I applaud them. They've been very responsive, if I may say that. Within a period of 1 week, you're able to be guided, and also the software is installed in your laptop. It should be noted, it's one device per entity. So if it's tax-wise, we only have one device where the ETIMS has been installed, and we have to use that device now to generate our invoices to clients. Next question, Leonard.
Susanna, I hope that answers your question. Next, we have one from Jose. How can we check if supplier is registered in ETIMS? I think, Matilda, you can take that one. How can we check if a supplier is registered in ETIMS?
Yeah, thank you, Leonard. One of the ways of ensuring that your suppliers are e-Teams compliant, basically, first of all, you're supposed to ensure that you engage in the first engagement. You're supposed to make sure that you've just engaged them just to ensure that they are registered for e-Teams. Basically, just inquire before you start transacting with them.
Let me add there. So it will be easy for you to confirm because there's a specific format for the e-Teams or Teams invoices. So there's specific codes, or the way the invoice is framed will be different from what the normal tax invoices would be. So we don't have an example of it because we have not prepared that. But just reach out to us and we'll be able to show you how the format is. It's quite clear with the KRA logo at the top. And of course, you have now the security markers in terms of those specific codes, because once you issue one invoice, like we stated, it's automatically goes to the KRA system. So it's quite specific. You can be able to see it. And for all our clients, I believe we are verifying, especially for those on retainers and audit under the partner entity Sterling. We are doing those verification on your behalf. So in case you need how to note if a supplier is e-Teams registered, just get in touch with us and then we'll walk you through it in more detail. But again, the invoice is quite clear and you can be able to note.
Great, thank you, Samuel. Next question from Felix. If after December 2022, one does pay their principal taxes, but has penalties and interest, what will happen given that the waivers on the same was scrapped?
Now, like I stated, there was a very short period between January to June before the tax laws were amended. So now from effective 1st June, because that's when all these amendments came in through the Finance Act 2023, if you incur any penalties and interest, or if you had incurred any penalties and interest from 1st January and going forward, and you had not lodged your waiver application by end of June when the law was changed, now those taxes, those penalties and interest are going to be collected as if it was the principal tax. So there's not going to be any waiver unless I put that back because I know there's going to be, based on the budget submissions that have been done, requesting for at least the waiver of penalties and interest to be reinstated. Because if you want compliance to go up, you need to give a carrot, basically. You need to entice the taxpayers so that they don't, they declare the principal tax. So it's a flaw in the current law. Maybe it was a bit of aggression so that now people take advantage of the tax amnesty, and then maybe later on it's going to be reinstated. However, at the moment as we speak, there's no provisions for waiving. So if you incur any penalties and interest, most likely KRA will be coming to you to collect those taxes as if it was principal tax. The advantage of it is that let's see what the financial cycle or the budget cycle comes in next year if there's going to be an amendment. So for now, don't rush to pay the penalties and interest. There might be some amendment coming in future. Make sure though the principal tax is paid.
Okay, great. Next question we have from Kennedy. In regard to the e-Teams, do hospitals and clinics need to obtain the software?
Yes, there's no specific exemption that has been provided at the time. So everyone needs, so long as you're issuing an invoice, and I go back again that your client is going to claim it claim it as an expense for their business, then you will need to provide e-Teams invoice until the time when the commissioner publishes in the Gazette or through a public notice who are the entities that are going to be exempted. So we do expect that will come in later on, but at the moment, everyone who is issuing an invoice for a service or a good, you do need to have eTeams or Teams device.
Great. I hope that answers your question, Kennedy. Next, we have Yvonne from Triple T Immigration. If we are using Teams machine, do I need to update to eTeams?
No. Sorry, Matilda, you can take that.
Okay, thank you. If you onboarded on eTeams, you're not required to onboard to Teams. It's either you're in one system or the other. You cannot opt for both systems. And unless you're experiencing challenges with unless you had first of all onboarded to Teams, then you're experiencing challenges with the Teams device. Now you're allowed to make an application to KRA to onboard to eTeams. But if your Teams device is working appropriately, you're not required to onboard to eTeams.
Great, thank you, Matilda. Zacchaeus, is it possible you share presentation for future reference? Yes, we will share the presentation. However, I believe there's a lot of content that's not been captured on the presentation, so we will have a YouTube video up, which will conclusively cover the session. For the bits that had hiccups, we will edit them and redo them for purposes of continuity. Kindly comment on the issue of special table and how to remove clients from the special table. Samuel, we have a question.
Let Matilda take that because she's been handling a few cases like that.
Oh, fair enough.
Okay, thank you. Okay, most of the cases we have come across on the taxpayers who have been placed on VAT special table, they majorly arise because of either due to invoices which are not, for example, if you've claimed an input and your supplier has not declared the sale from their end, then in that case, KRA will now place you under the VAT special table, or whether you are continuously filing nil returns, or you are not filing returns and you are registered for VAT. So those are some of the reasons why the KRA is placing taxpayers on the VAT special table. And the way to go about it is to write to your tax station, just find out the reasons why, the specific reason why you've been placed in the special table. Then you now required to avail all the supporting documents depending on the matter. Then once KRA have been able to ascertain that you're VAT compliant, then they'll be able to restore back your VAT filing obligation.
Great. Edwin, I hope that answers your question. If not, please do let us know. Next question, we have David Karaoke. If you have branches, do you use the same eTeams or each branch install its own? If you have branches, do you use the same eTeams or each branch install its own? Matilda or someone?
Okay, let me take up that one. I think KRA have introduced different types of softwares for eTeams. So if you have, for example, like for supermarkets where they have different branches, there is a software specifically designed for that, which once you install the software, you're not required to have like more than one type of software. So in that case, if you have branches, you just make sure you have the right software which allows for trading on different branches. Yeah, so the way forward, just ensure that you obtain the correct software, depending on the type of business you undertaking. Thank you.
Great. Hope we can proceed. David, please let me know. Next question from Nicholas. Should objection decisions by the commissioner be accompanied by a counter assessment? We have instances where objection decisions come with a new, lower or higher tax assessment to the taxpayer. The court had rules against counter assessment, but I am not sure what the standard practice should be. Should objection decisions by the commissioner be accompanied by a counter assessment? We have seen instances where objection decisions come with a new, lower or higher tax assessment to the taxpayer. Court had rules against counter assessment, but I am not sure what the standard practice should be. Samuel?
Yeah, let me respond to that. So the way the law was, and actually there's a ruling against that, you find that some cases where an assessment is issued, you objected to it, and it goes to IRO, and independent review objection in this case, for those 60 days, they have, previously the way the law was is that you have three options. One is that they confirm the assessment as it is. Secondly, they fully agree with your objection and they vacate in full. Or thirdly, they partly amend the assessment. So for the assessment that is, you get an assessment or decision, objection decision that is lower, then that is okay. The main issue now is when the objection decision would be higher. So that would be against the law, because what the tax authority is supposed to do is they would make a recommendation, or in this case, the independent review of objection would make a recommendation to the assessing team that there's new evidence that they've seen, there was an under assessment, and a new assessment would be issued to begin the process again. However, there was some proposals that had been put in that at IRO stage, it would be possible for the tax authority to make the assessment on the higher side. I'll need to confirm if indeed that passed, but at the moment in practice and the way we've been going at it is that it's only three options. You should not get an assessment that is higher than what you objected to. So if there's anything that's above the objection decision that has been given by the tax authorities above, then there's already precedent, I believe, in the Tax Appeals Tribunal or the High Court that you can utilize to fight against such.
Thank you, Samuel. Next question we have from John. Does this mean that any business expenditure not supported by an ETINS generated tax invoice shall not be deductible for tax purposes with effect from 1st January 2024?
Let me be clear. For that, it's any tax or deductible expense that an invoice should have been issued. So if an invoice should have been issued in that instant, unless it falls within the exempt items, which we said payroll, emoluments is exempted. We talked about interest, we talked about investment deduction, basically your capital deductions and other items. It's specifically provided in the Finance Act 2023. So apart from those specific items that you're not supposed to be invoiced, that have been provided for exemption, then if an invoice was to be issued, you should have a TIMS or ETIMS supported invoice. Of course, there are other expenses that do not require invoicing. So let's say provisions, auditor, tax fees, legal fees. At the end of the year, you've made provisions for it, and such, that there's no requirement for a tax invoice. Or there's no requirement for an invoice to be issued. But should you have any expense that an invoice should have been issued, and this now will go all the way even to petty cash amounts, then you do need to have a Teams supported Teams or a Teams supported invoice.
Okay, great. So we have somebody who's interested to see how the invoice of an eTeams registered client looks like. We will send it to your email. I think that's Operations East Africa Rift Valley. We will share that in due course. We have a question here from John again. Will petty cash expenses be allowable expenses on the income statement going forward, since most of them are not supported by actual invoice to say?
So this is where now I was saying that based on the current law, even those petty cash payments, so maybe you have what supermarket is okay, since the supermarket is going to give you, but maybe you're buying some produce from local farmers or from Mama Mboga, or I don't know, you have some repairs in the office or any other items of that nature. Unfortunately, if an invoice needed to be provided, the receipts that are normally issued by, let me call it the informal sector, quote unquote, then will not be sufficient. You'll be required to, the person who's supplying you, to give you an eTeams or Teams supported invoice. What this is doing from the carrier perspective, it's again bringing all this informal sector into the tax net. In terms of implementation, that's the way, because the law and practice always there's a gap, and I believe that's why they had stated, first of all, everyone to be onboarded on eTeams and Teams from 1st September. So that gives you a quarter to deal with the teething problems and carry to build capacity so that they can give all these devices and softwares. Some of the softwares, they are actually on the phone. You can be able to implement that, put it on the phone and issue a Teams invoice. The software is free. Yes, so at the moment, based on the law, then petty cash requirements will be required to be supported by a Teams or eTeams invoice if for that specific supply an invoice is required.
Great. I hope that answers the question. If not, please do let us know. We have some questions in the Q&A section. Apologies for keeping them waiting. I hope you're still with us. We have Murira. eTeams has to be a big problem. How do contractors mitigate this, given that a huge component of their costs is sand/hardcore, which the source from old mothers and fathers in the village? eTeams has to be a big problem. How do contractors mitigate this, given that a huge component of their costs is sand/hardcore, which the source from old mothers and fathers in the villages?
So unfortunately, again, it goes back to bringing the informal sector to the tax net. The tax authority has tried to make it quite simple for the issuance of a Teams supported invoice, Teams or eTeams, going all the way granularly to even having it on your phone, for example. So there will be teething problems, of course. Big contractors, in terms of documentation, will need to make sure that they get the proper documentation from the side. So the accounting teams, the finance teams in such departments will need to be keen on it. it's an issue of ensuring that there's tax compliance. But having said that, the commissioner has powers to exempt specific taxpayers. So we wait to see if within the first quarter, based on the knowledge or the learnings that are picked up in this fourth quarter of 2023, if there's going to be any exemptions that will be provided. But as it is, as the current law, the way it is that if you claim and it should have had a tax invoice, then you should have a Teams invoice, Teams or a-Teams invoice.
All right. A question from Judah. Do you have success cases on TAT on section 42? Please share a link. So do we have any, Sam?
I believe it's what we shared. There's the ESF case. You can find the ruling actually on the Kenya law. It's already published there. But we can send you the.
Kindly share your email, Judah, so we can share that with you. Next question. We have Sajad. In situation where you are expensing items from your inventory, how will the justification of the expense be applied?
So it's not for the e-Teams and Teams system or the requirements that have been set by the Tax Procedures Act or amendments in the Tax Procedures Act brought in by Finance Act 2023. It's not only on the invoicing side, even on the inventory side, there's a requirement that you will keep a catalog of your inventory or your supplies for those who do maintain inventory. So with that, the tax authority will already see what is your inventory levels, whatever you've sold, and whatever you're expensing. So for that, it will be quite direct. So we continue the same operations, but now the inventory system management is plugged in on e-Teams or Teams or iTax, and Kerry will have access to that. And now you can expense, and they'll be able to see how your inventory is moving, basically. And for that, you can be able to expense accordingly.
Okay, great. I can see we have 10 minutes left to the end of our session. I'll try to wrap up as many questions as possible. For those of you who are wondering where you can access the recording, I have attached our YouTube channel where we will be uploading the recording once it's cleaned up. Yeah, kindly share a link of the East Africa Seafoods versus Kerry. Kindly share your email so we can share that with you. That's for Samson. Zacchaeus, have a personal question. In that whether you can have a room for one to volunteer at your organization to learn tax. That's when have time.
So the way we have it right now is we do have 6 months internship programs. And next year we'll be launching one of the products that we've been working on for the last 3 years, which is the TaxWise Tax Academy. Basically, we'll be having more trainings, tailored trainings, apart from the webinars. So the webinars will continue. Our target is that we do one in every month, but also we'll have now under TaxWise Tax Academy, providing specific trainings so that now tailored industry or topics, and we targeting in the market. Those are the only avenues we have for people to learn. It's either you join us through internships or through our programs for trainings.
Great. I think we have our last question. I find Tim's requirement for deductible expenses. First, if the expense were whole and exclusive for the business, for business purposes, as per Section 16 ITA, does it mean that if cost was incurred for business purposes but fails the 18th requirement, is therefore non-deductible expense? I find this illogical and irrational.
I do agree with you, partly. I do agree with you partly because one of the way they've structured it, they would have given a bit more time for people to take up e-teams and teams, that proper invoices are issued, and then you could claim it. Where I disagree partly, it's on the other point is that even if an expense has been claimed wholly and exclusively for the generation of income, it's you as the taxpayer who is mandated to demonstrate that it's a true expense, that it's a deductible expense. And typically how you justify that is through provision of supporting documentation. So in the past, what KRA used to do is they'll ask you for the invoice, they'll ask you for the payment confirmation, they'll ask you for the contract and such, and maybe even correspondences with the suppliers. So it will be the same thing, is just now that it's on e-teams. And the fact that they've put it in law, because in the past they would come in and you'd have those audits for any auditor or any tax advisor, and some of the clients have gone through this, and especially in the contractor space, where any expense that would not be in your VAT return, the KRA would come in and disallow it, remove it from your corporate tax return, that it was not in your input VAT return. KRA would come in and disallow it from your corporate tax return. So from your annual tax return, and push the onus on you to justify that these are legitimate expenses. So previously, and of course they lost the case in law because in court, either tribunal and high court, we need to check, because they did not have governing provisions to support such, that you could disallow all the expenses that are not supported for through that have been claimed through the input VAT return, apart from now, of course, payroll costs and such. So e-teams will, once it's picked up, it will make it easier, because if they're able to implement and the system is robust enough to support, then justification for that this expense has been wholly and exclusively incurred, then it will be easier to pass that test without even giving supporting documents like contract, payment vouchers or payment confirmation and bank statements to justify. So yes, 50-50. It's a 50-50 matter. Partly agree with you, but on the other side, it will enhance compliance, make it easier for most taxpayers. There will be some teething problems, because basically what you're saying is that I should not source from anyone who's not registered for e-teams. That one pushes a big chunk of the informal sector out. So now how to bring them back and take care of that is now the teething problems that we're discussing. And we leave it that now to the policymakers in KRA and National Treasury to sort out.
Okay, great. Thank you for that. One more question has come in. We still have time for that. If a company had cleared the principal amount and what is pending is the interest and penalties, do we have to apply for amnesty?
No, let me answer that one, Lenny. No, if you've already cleared the principal tax, you're not required to apply for the amnesty. The amnesty is meant to be automatic. So once you've cleared the principal tax, and KRA have updated the iTax system to enable the automatic remission of the waiver and penalties, you're going to automatically be granted the waiver. So just make sure that you have cleared the principal tax, then the waiver will be granted automatically.
Great, I hope that answers your question, Violet. Seems like we've run through all the questions. If you have any more questions, feel free to contact us on our email address, info@taxwiseconsulting.com. We also have our social media pages, Taxwise Africa LLP on LinkedIn. On Instagram, we have Taxwise Africa Taxwise Africa actually. On Twitter, Taxwise Africa as well, and Facebook. For those of you who'd like the slides and the recording, we will do a conclusive mail with all the links and presentation and video as well. I think that sums up our session. I don't know if Samuel, you have any closing remarks you'd like to give?
So my closing remark will be based on the beginning. So first of all is to say thank you for all the participants for coming in. I hope we've made good of your time and we've imparted knowledge to you. And in case of any questions, please do feel free to reach out to us. Some of you have our contacts, direct contacts. If not, the info, as Leonard has stated, the info email has been shared together with any of our social media, and you can even Google us and find us online. And please feel free to contact us for any question that you might have. We'll be happy to assist. So that's one. The second point is what I stated in terms of what is the tax environment that we are in. You have the country needing a lot of tax revenues so that we can cover our debts and also for sustenance of the economy. So what you will see going forward is, of course, more aggression to make sure that there's more collections, because the tax auditors will be given higher targets that they might not be able to meet. And the easiest route for that is to raise assessments on any imbalances or any hanging items that are already on legacy and on iTax. That's the low-hanging fruit. So even if you are in their shoes, that's exactly what you do, so that now you can show that you're working towards your target. Then what it means for us is that as taxpayers is you do need to make sure that your tax ledgers from legacy all the way to iTax and now coming into e-teams, that you're compliant. You could see that this is it's not a Kenyan specific matter. Whole of East Africa is introducing big data in terms of tax collections, and this is the first step. This is basically the first step, basic tax compliance. Before we even talk about tax litigation, or before we even talk about planning, before we even talk about controversy. And like I stated in the beginning, some of the carrier already at tax controversy, they're looking at the law and seeing where can we get more from a specific taxpayer based on their own interpretation of the law. So it's the same that for taxpayers, that you need to review your operations. Before you go to tax controversy, you have to make sure your compliance levels, documentation is key and it's clean. Then you go to planning, then you go to tax controversy. You cannot run before you even crawl. So let's begin at that level. Let's be more aggressive on our side as well when you're following up with the tax authority to make sure that any reconciliations are done. Do not wait until when you, for example, want your TCC. That's the time that you all the previous matters. That's when you're looking at it and calling your advisor. Can you sort out? Can you reconcile? Let the matters be closed and be done completely. So that will be my closing remarks. Be on the lookout for more of our trainings, because we'll be sending out this and we'll make it a monthly affair. Engage with us. We are here and we are here to serve and make sure that your business are protected from any tax risks. And then once it's protected from tax risks, once you have your back solidly, we can now venture into tax planning and tax controls. So thank you everyone for participating.
Okay, I think that sums up our session today. I just want to extend our most sincere apologies for the hiccups we had earlier on. We will clean it up and make a proper video on YouTube that will sum up everything that we have covered today. Thank you for joining our session and enjoy the rest of your afternoon.